Welcome, my name is Mike Sullivan. I'm a former IRS agent and teaching instructor with the IRS. Welcome to my YouTube channels. My YouTubes are usually no more than 3 minutes. Me and my M&M guy behind me give you a thumbs up. Today we're going to talk about the 433B, the business financial statement that IRS uses, tricks, traps, and other things. So no doubt, being a former agent working over thousands and thousands of cases, I like to look outside. I'm in South Florida, so I'm looking at the beach. You don't mind if I look out there. So anyway, in filling the 433B out, the IRS agent, the revenue officer, is going to look closely at it to make determinations, and almost none of them are filled out the way they need to be filled out. So I just want to pass on some golden gems that you need to know about the financial statement. First of all, the IRS is going to want the corporate return, and they're going to want to make sure the corporate return matches someone with the 433 buzz. Usually it doesn't. Real important tip: make sure the 433B income and expense fits the time period you want to show IRS. Give you a perfect example. We're in a beach town down here in South Florida, so I may not want to show them June, July, August. It's the hot months, summer months here. When do most people come to South Florida? Well, November, December, January, February. So those months are going to be high. One of the mistakes people who don't fill this B out a lot is they take just maybe the last couple months, but you want to take a season of time that lowers the income as much as you possibly can. So right now we're in June, so maybe January to June is a perfect time. Maybe it's best to show them only 3 months. Go to April, May, and June. So the time period that you're giving them is going to shape the result, the big result that you're getting from IRS. If you can drop income by maybe 25%, it may look like you don't have that much more to pay IRS. So that has got to be cleverly weighed to determine that. So what I do is I look at the income for each month, the expense for each month. The higher number that you put for income, and the IRS is just going to ask for more money. So the key that I see on the 433B is to make sure you carefully choose the time period. By the way, every now and then the broad beams freeze, so you'll get me like, I'm not going to go out. My mouth will always be open. You can tell. The other thing is you want to look at fair market values. The fair market values I use are probably not going to be the fair market values you use. I usually put the straight values or realistic values or sale values if there's a garage sale. You know, maybe a car you're selling, the car shows, oh yeah, I think I can get 10 grand, but reality you're only going to get 7 grand. So you want to make sure you reflect a real base value on everything and not inflate the values, because IRS is only looking at 2 things on that financial statement: what the assets are they can collect from, and what the leftover monthly income is. So you got to make sure that that matches up. One other thing you got to be careful to look at is at the bank statements that you use. IRS is going to go through the bank statements, and they're going to be looking at certain maybe draws or income that the owner has. So you got to pay special attention to that. When you're working on a business financial statement, you're going to give it to IRS. Make sure all the documentation is there. Don't allow IRS to go fishing and ask for this or that. I put a nice, neat package together so IRS doesn't have to go outside of the package I get them. Make sure all the blocks are filled out, all the documentation is there, you have the cancel checks, the bank statements, but most important, give the time period to IRS that best reflects more of a hardship period of time than a high season. Thanks for listening. If you have any questions, you can call me. Somewhere there's going to be my number, my email address. You need help on a case, call me. Thank you.